Well, in today's big interview, we talk with Gerrie Fourie, the Chief Executive of Capitec. It's always a pleasure to catch up with you, Gerrie, on South Africa's amazing bank 21 years ago that you guys started, and it's extraordinary what a contribution you've made to the country. But that's in my newsletter tomorrow. What I want to talk to you about today, though, is the progress that you're making at Capitec, but particularly what's going on with the market, because your share price has had a fantastic run. And then earlier this month, you bring out a trading statement and it drops sharply. I just want to put it, for those who haven't been watching the numbers that carefully, it was at 2,150 Rand a share, came all the way back to 1,600 Rand a share after your trading statement. Now, is this because your fans are saying you're not growing as fast as we want you to?
Yeah, afternoon, Alec. I think you can speculate quite a lot. I've said it a couple of times. We don't manage the share price. We manage the company, and we manage the fundamentals. And we believe the fundamentals are strong, and there's plenty of opportunities. I think the market was probably hoping we'll bring out a 21% growth or 22% growth. And I think the big difference is lying in our transactional income, where the transactional income came in with 8% growth, where we normally are 17, 18%. But there was the cost of Live Better that came in of 100 million, which the market should know. And then there was the 250 million on the SMS fee that we've dropped, and the in-app messaging in your app if you do a transaction, which is for free. So that made a change. If you bring those in, then it's back to a 21% growth in our transactional income. But, it's coming back to the Capitec philosophy. We believe we do what is right for the clients. And I don't think there's many companies that over a 6-month period make decisions and basically give back to clients. If you add the two, basically 350, 400 million back to the clients. But, that's our philosophy. We believe in long-term sustainability, and we believe we've made the right decisions for our clients.
Yeah, that loyalty program, the Live Better program that you spoke about now, does seem to be catching on and getting a lot of momentum. How big or how many of your clients are actually using it now, are grabbing the loyalty program?
We're sitting now on 8.5 million clients, so it's grown tremendously. If you look at it, it's a 6 months launch. And it's interesting, I said this morning in my presentation, I didn't even know what Bolt was when our team came and said we need to support Bolt, or Bolt wants to join our loyalty program. And Bolt on the Capitec space is now 3 times bigger than Uber. So it just shows you the power of our client base. This scheme is 45% up. And we've just launched Cashbuild from September. So I think there's a lot of benefits coming through to our clients. We're also seeing very nice moves of clients' behavior to using more digital transactions and moving away from cash. And that's exactly what we want to do with Live Better.
But that must also mean that you would reassess the value for your partnerships. We've seen how Easy Equities has expanded dramatically since the partnership with Capitec. Bolt, as you've just explained now as well, I also had never heard of it until your partnership that you're doing there. How do you sift out? Because anybody looking at this, any business owner looking at this will say, crumbs, I'd love to get into the Capitec fold.
Yeah, it's an interesting scenario, because you need to make certain that you create value for your clients. And it's interesting, the debates we're having with suppliers is they are, to a certain extent, scared of that 19 million. Because if you give a 1 or 2 or 3% discount to 19 million, it could have an impact on your bottom line. But again, for me, it goes about that long-term view, because you create that value for the clients with the right partnerships. So we will always limit it and don't go everyone, but limit it to a certain extent. And I think there's a lot of opportunities in Capitec Business Banking when that is launched to bring that into our Live Better scheme, because that's the power we've got, is that 19 million clients.
That's something that I'm personally very interested in, having been a former Mercantile Bank client, and I'm really looking forward to to seeing what your offering is going to be. Can you give us a voorsmaakie?
Now, I can't say too much, but it's going to be all digital, very strong on relationship, very strong on making certain we give service, and it's all built on the Capitec fundamentals, that real-time simplicity, affordability, transparency. So the Capitec retail fundamentals all are embedded in the business banking side.
Still focusing on entrepreneurs, because that was the area that Mercantile was particularly strong at, although not so good on the tech, which you know better than most, given how long it's taken you to be able to implement the right kind of tech.
Yeah, for sure. We definitely don't want to focus on the commercial banking side. So it's on the business banking side and on the SME side. And I think a big focus on the S side. I think there's opportunities there. And I know a lot of people are starting to move in that market. But I think, let's see when we talk in April, when our results comes out, you'll see the full offer. And let's hope we've got the sweet spot there.
Who are your major competitors in that area?
I think all the banks are playing in that area. I think FNB is particularly strong. Nedbank, I know in certain areas, certain sectors are very strong. But again, it's your affordability, it's your transparency, it's your simplicity. If I look at retail bank, we don't differentiate between clients. All clients are paying exactly the same fees. All clients has got the Capitec card. All clients are treated the same. So it's that simplicity concept that's coming through. So we don't have, you've got a purple card, you've got a black card, you've got a silver card, and based on that, you've got certain products and complexity that you bring in. So it's definitely going to be the simplicity component, which I think is strong. Because you want people to understand their financial well-being, and the same with the SMEs.
Yeah, and the other area where I guess outsiders have been looking for a long time to see how the landscape would change is with cell phones, with the whole mobile banking. Now, it appears from reading through the commentary to your results that this is an area that is now very important to Capitec, the whole digital side. Are you getting into competitive positions there against the cell phone providers?
Well, I think two comments. The first is, if you look at our 10.8 million clients that's on digital, it's a big number. And we're really starting to convince people that you can do your banking anywhere, anytime. And for us, that's promising because we want to take cash away and we want people to do electronic transactions, pay with your card, pay with your phone, because then we've got data and we can understand what clients is all about and we can add value to them. And then we've launched Connect on Monday, Capitec Connect, and we're quite excited about it. I said this morning, we've got 8 million clients that buy airtime every month from us. That's a 30% market share. And we believe we can offer them value. If you look at what we've came out with, 45 Rand per gig, the average price in the market is about 85 Rand per gig. But the big thing is no expiry. A lot of people pay and then it expires and you actually lose your value. So we've got no expiry as long as you do a transaction within 6 months. So the moment you do a transaction, you've got another 6 months. And that's just regulations. There's nothing we can do. But no expiry and I think a very competitive price. So it's just, again, bringing that value to our client base.
But that's massively disruptive. You're going into the cell phone market at half the price. Who are you partnering with there?
At Cell C, it's actually quite interesting. The product was developed close to 2 years ago, but we were waiting for the recapitalization of Cell C, and that was completed last or the week before. So it was a little bit, let's call it frustrating, because we wanted to launch and get into the market. But yeah, we're in the market, and it's going to be interesting to see what happens.
So let's just understand this. You've already got 8 million people who are buying their airtime through Capitec. Now they're going to be buying their airtime through Capitec, but just through a different channel and at half the price.
Yeah, what we have to do now is to convince them, let's say they've got a Vodacom or MTN or Cell C SIM, They must go into our branches and just pick up a Capitec SIM. It will cost them R5, and then put in the SIM and then buy airtime like anyone else is doing, but at a very competitive price. So it's that value, and I think the other important thing is the data, because there's a lot of data in what you can get from what the client is doing, and again, that will add value to the client on the long term.
But is the coverage from Cell C as good as, say, Vodacom or MTN?
Cell C is actually structured and has got an agreement with MTN, so they use the MTN towers, so their service levels are exactly the same as MTN.
Wow. Okay, so you're certainly shaking up a whole new area. It reminds me of the last time that we spoke, where you were talking about the partnership with Amazon, or certainly the relationship with Amazon. It's almost like whenever Amazon goes into a new market, we see share prices of companies in that field dropping sharply because of a fear that Amazon is going to steamroller them. Are you starting to get that momentum going at Capitec now?
I can't comment on that. For us, it's just purely about the client and what value we can create for the client. So if we believe there's value and it makes sense, then we will do it. We don't go out and try and disrupt a company. For us, it's purely about the client and what value do we create for the client. So that's our focus.
But you've got to have been thinking about that, given that you are meeting with the Amazon people and you know their model very well.
Yeah, I think it's but I'm coming back to, I think you play the wrong game if you focus on a particular company or a particular industry, and say I want to disrupt that company. I actually don't like the word disruptor. I like the word is you're really focusing on that client needs. So if you work with Amazon, they've got that 6-pager where everything starts from the client backwards. And I think that's a big lesson for all of us, as really having that serious debates about the client needs and where they're going. If you look at South Africa, the last couple of years, everyone has been talking about data is expensive and it is expiring. And I think we saw just that opportunity because we're sitting with a client base, we're sitting clients that is buying airtime. So why don't offer it at a much more affordable price?
Incredible. And 50% is a lot more affordable, that's for sure, at that kind of discount. Just again with Amazon, I read in one of I think it was just a one-liner, where you spoke about migrating your data platform to the cloud. How's that going to make a difference? Well, I've been to your computer center in the Western Cape, and it was very impressive. But are all those computers now, all that hardware going to be thrown out and it goes straight into the cloud?
Yeah, that's unfortunately life. Things change. Probably not by the end of next year, but we will have our core banking systems and our core data centers with all our data will be in the cloud with AWS. It just gives you tremendous speed and agility because you can start up services immediately. Normally you have to buy it in and then it's a 6-month period. Yeah, we can say to Amazon, okay, right, we need a service, and immediately you switch it on. And your computing power is just so more powerful. If I look at our provisioning models that runs it's quite intensive on data because it's 5 years history on all our clients that has taken credit. That model used to run 3-4 days. Now we do it in an hour and a half. So your ability to analyze and use your data is much more. And I think the other big advantage it's got is the ability to go onto real-time data. Because the old traditional was always, let's call it batch, and then you manually work the data. So the focus is to go into real-time data so that we can talk to the client on a real-time basis.
Are you the only bank who's doing this in South Africa?
No, I think everyone is going to the cloud. I think it's basically who's first. And first is also not important. It's more on how do you optimize it and how do you make certain that you get the maximum out of it. I think the one thing that cloud also teaches you is that you need to optimize it because you paper data piece that is lying with Amazon. So you need to make certain your models and your data that you're storing, that you optimize it. So I think worldwide everyone is moving to the cloud. It's just who's going to do it first and who's optimizing it.
Gerrie, it's lovely to watch the whole Capitec story continuing to unfold, looking at new areas, continuing to be innovative. How do you do that? How do you keep it going? I see now your colleague Andre Duplessis is he's gone off into the sunset. Rian Stassen, your previous colleague, has also left. But how do you keep yourself motivated every day?
Well, I think, my passion was never to be a CEO. My passion was to build or to be an entrepreneur. So if I look at what we're doing with retail, what we're doing with business banking, what we're doing with Connect, it's building. And so I'm a big believer that one needs to live your passion, and whatever that passion is, if it is playing guitar or being an artist, live your passion, and really, because that enables you to stand up in the morning and do something great. So I think that is important. I think what you're sitting with in Capitec, we've got a team here and a culture of client-centric people and delivery. We've got a tremendous team that is continuously working and focusing and seeing on delivering. And what is quite nice is, I've said this morning, we've restructured the retail side, and the average age of the retail exco is now 44 years old. So you bring that young blood in, and yeah, it's going to be interesting to see. I can see already their passion and energy is just coming through. So it's just nice to see how the company evolves.
Just from the financial point of view, to close off with, the interim's headline earnings per share up 17%, your 5-year average 17%. Is that the new number that we should be working into our intrinsic value models?
That's actually quite interesting because we looked at what the interim result, and it came out at 17%. And then when I was preparing for the presentation, and we were looking about the last 5 years and COVID and the KwaZulu-Natal unrest and floods and everything, and then I asked the team, but what was our 5-year earnings? Because I just wanted to show to the market, but how resilient we are and how fundamentally strong we are. And it came out to be the same number. So, for us, I haven't got a number that we're predicting. It's more, I'm showing with transactional income, we've cut back or gave back to the clients over 400 million. If we believe it's the right thing to do, we will do it. So, chasing profit, I think, is very short-term orientated. You need to look at long-term and making certain you create value.
Okay, and now the last question, which is an interesting one for me, and I think for other people who are observing this, is your view towards partnerships. We know that Easy Equities has done a great partnership with Capitec, but now Easy Equities is about to do a partnership with Discovery Bank. Some people might say, hang on a minute, why didn't Capitec get an exclusivity? Or how do you feel about that? How does that fit within your culture and your view on partnerships?
Yeah, I think if I look at partnerships, you have to partner these days. You can't do everything yourself because there's just so much different options that you need to give to clients. Now, if I look at Easy Equities, for us to start an equity firm and go through all the regulations, et cetera, doesn't make sense. And I think exclusivity is people is not going to go exclusive anymore. It's how do you package, if you've got an agreement with them, is how do you package it, and then how do you sell it to your clients? That's important. But I think it's important, it's like a marriage. You need to make the right choices with the right partners to make certain that you've got a long-term relationship with those partners.
So the fact that you've got a competitor who's also partnering with your partner is not bothering you?
No, I think if you look at our client segment, Discovery is predominantly more higher income client segment. We basically more lower income, but we are also, if you look at 70% of our client base is below the age of 35. So we've got a very young client base. And what we're trying to do with Easy Equities there is to actually show them the equity market at a very affordable pricing structure. So the whole aim is also not to make money out of it, but actually just educating our client base and make certain that they understand equities. So I think we've got a completely different aim to what a Discovery is.
Driving the savings culture in South Africa. Gerrie Fourie is the Chief Executive of Capitec. I'm Alec Hogg from biznews.com.